Hello everyone, my name is Denis, and in this video we will talk about 20 American stocks, and I hope everything alright. I will just publish the whole tickers. It is not working. Interesting. Anyway, first ticker, it is Costco Wholesales Corp. Average price to sales 1.19, gross profit 9.42, and price to earning 44 for Costco. I think it is a little bit huge number, but anyway. And here you can see that actually model works not really great. It's just average numbers, and price I think is far away from the median prices. I think it is awesome that they grow the revenue and net margin, and net margin actually looks really nice, from 2.5 in 2021 to $8 billion in 2025. I think it is awesome, and if you want to offer a ticker, feel free to do it in a comment section. If we will check this stock on Eurofocus, you can see that future revenue growth rate only 8%, and net margin really low. I think price to earning 50 is not really interesting to buy, and in a worst case scenario you will just lose money on some correction. On a normal case scenario you will grow maybe for the same 8% with a revenue. From my point of view, it is definitely not interesting, and I wouldn't buy Cost right now. And I think something like 30 or maybe 25 will be okay. Now it is 50, not interesting. Second one, it is AMD. Definitely AMD feeling a little bit better than in 2019 or something like this. Average price to sales 9, price to gross profit 21, and price to earning in a negative zone. Average I think 44 is okay, but you can see that from time to time I think they are in a negative margin zone, and it is not cool. Right now we have a little bit High price, price to sales right now 12 and with average 9. It is quite hard to buy it. AMD. Analysts estimate extremely high growth rate for 35%, and definitely it is interesting. If you believe in this semiconductor boom, I think it will be really hard for them to grow with these numbers. That is why I think I will just pass it like all other semiconductor stocks, because if you miss this opportunity, I think it is better just not to waste your money, and probably you will find something else like Microsoft from the yesterday's stream. Price turning 96, and yeah, it is definitely overvalued right now. From time to time you can buy AMD stock with price to sales 4. It is definitely better than 12. That is why we will just pass it. And I think if we will see a really huge drawdown, maybe for 50%, I will think about to buy it. Right now, no, not interesting. Next one, Bank of America. BAC. Price sales 2.2, net income multiplier 11.4 for average, and now we can see that actually they are a little bit undervalued, and it is interesting. But from the other side, if you will think about revenue for banks, it is some strange number. They are growing, but not really fast, and they have really nice margin, 26%. I think you already see that they are following earnings, and it is not really bad numbers right now. Bank of America. Price right now 54, and if this valuation from Guru Focus is okay, you are buying this stock with a valuation from 2029. In theory, you can just live with the stock for like 4 years or 3 years. It is not really awesome. Future revenue growth rate only 5%, and it is a really slow number. I think we can buy it maybe for price turning 10, something like this, and right now it is minus 30% or something like this. Again, Bank of America not interesting for me right now, but it will be really interesting maybe for 30 bucks or something like this. Next one is Chevron Corp. In a previous video we talked about Exxon. I think they have quite close numbers, and the chart, everything looks the same. You can see this red line falling, and it is not really good. They have a decline in their earnings from 2022. Maybe they will have some irregular profit in this year, but on a long run, I think Iran and the USA situation will be ended somehow, and we wouldn't see any nice profits like in 2022 or 2023. It was $35 billion. Now it is 12. I don't think that it is a good idea to buy it right now. Price to earning 30. And I think we don't really need to check it on a Guru Focus because I don't think that analysts update their view really often. And yeah, you can see that analysts actually they don't predict revenue growth, and that is why it is not investable company. You will see the same numbers or maybe a little bit lower. That is why I just can't buy the stock, because anyway price will reflect revenue and income. And also we can see that they grow their debt, not a really good sign. And ROIC minus WACC minus 2%, share buyback minus 12%. Awesome company. Thank you for watching. I think it is really hard to buy it. Next we have ABBV, and actually I really like ABBV because I made on ABBV a lot of money, because it is a really nice company. You can predict the earnings. I think they are awesome. Average numbers, price to sales close to 5, price to gross profit close to 7, and price to earnings 49. Really not good number, and as you can see they have some problems with margin, because in 2021 it was a really nice company with net income over 20%, and I remember it on this level because I actually not really analyzed some American stocks for 3 years, and it is not quite good for them to work with 6% margin. I actually don't want to buy companies without earning growth. That is why I think we can just pass it, or maybe you can think about to short it, because now price to earning 89. Definitely not for me. ABBV is a piece of crap right now. Maybe they will recover, and we will check them again, but not now. I already saw this huge price jump from 320 to 760 in Caterpillar with ticker CAT, and I don't really believe in it. Yeah. I don't think that it is a normal price and you have to buy it. I think fair price will be 360, and this spike in revenue, I don't think that they will grow for the next years with the same temp. And it is interesting what actually analysts will predict in Caterpillar, and you can see that future revenue grows 8%, 73, 80, 85, 87, 88 for 2029. It is definitely not 8%, 73 to 80. Everything in a red zone, price to earning 40. With the median 17. Plus, I know maybe 4 companies in China that can produce the same stuff that Caterpillar do, cheaper for like 2x or 3x. I don't know what's happening in Caterpillar, and it is not really interesting to dig in it, because with this valuation, what I'm thinking to sell like for price to earning 80, no, it is not really interesting. Home at Depot, HD ticker. HD, and I actually didn't print the numbers, but you already can see that they have a drawdown in earnings, and it is a not really good sign for stock to buy. Growth rate for 1 year minus 3.79. It is interesting that actually price follow earnings, and it is okay. Now we have like a normal valuation, because you have to think about this red line like a fat line, and I think they are valuated quite normal. I don't think that the analyst will predict something interesting. Really slow grow, like 4%, price to earning 23. I think it is a little bit or somewhere in the middle. Definitely not a good time, but if they will fall a little bit more, maybe I will think about them again, but I think I need like 17p or 18, something like this, and it will be like 20% more in negative direction, yeah, like 270. And actually I will add this stock to my list, HD 270, because on the long run I think everything will be okay with the shops, and actually maybe they will see some spike in revenue, because now it is not really good time to sell Home Depot stuff. And then we have interesting company PLTR, Palantir Technologies. It is not really normal to trade something with price to earnings 196. I think this model is not really accurate for Palantir. But anyway, I don't know how to evaluate it properly, and if we will open it on Guru Focus, we will see something like 50% future revenue growth rate by analysts, or something like this. Yeah, and actually, again, you're buying a company with valuation from 3 years in the future. Yeah. 48% future growth rate, but I saw these valuations like 100 times, and it was not 48%, it was like 10%, and people just burn their money in this thing, because with 10% growth rate you will see the same valuation in maybe 20 years or something like this. Definitely not interesting. I don't understand how people can buy it and not pretend that they are not gambling, pure gambling. Not interesting. 36% net margin. Next we have Procter & Gamble with ticker PG. Consumer and defensive household and personal products. Average price to sales 4.44. Price to gross profit 8.87. And price to earnings average 25. I think it is a little bit huge number for Procter & Gamble, because they are not growing for like 3 years. They just grow their margin a little bit. Maybe 25 price to earning is okay for the company if they're growing for like 10% and they have 20% margin. They have close to 20% margin, but they are growing only 1%. Definitely it is not interesting, but with a unbelievably low price like 120, and it is not really far away, like 15% more down, and I will think to buy it, but anyway, you have to research it a little bit. I will add it because they're huge and they can recover really fast. Procter & Gamble. It's interesting what analysts think about the revenue growth rate, and I can see that it is really slow, 3%. If you will just live in this stock, it is not really interesting. And it is quite awesome that the stockholders' equity not growing, like 47, 46, 46, 46, 46, 50. Definitely not my company to buy, and even on a 120 mark I will think twice to buy it. It is strange that we don't have anything good to buy right now. GE Aerospace, I think it is previously General Electric. Price to sales average 2.35, but you can see that revenue were a little bit higher, but with the negative margin. Have a little cough. Don't know how to analyze it, maybe based on earnings, but earnings right now 37. When you see something like this, in 99% it is just a good sign to pass it, and analysts predict 8% growth, not interesting. It is overvalued like significantly, like group focus think. Next one, Lam Research Corp, LRCX. Semiconductor equipment and materials. Average price to sales 6.19, price to gross profit 13.15, average price to earning 23.4. And everyone thinks that this unlimited money printer will work in AI niche, and everyone will be absolutely rich. I don't think so. Like, and I'm sure for like 70% that we wouldn't see that numbers in revenue for like every semiconductors stock. That is why I will just pass Lam Research, because we will see the same numbers, like 40+% future revenue growth rate from, oh, it is only 20. I don't understand how they can cost price to earning like 50, price to sales 16. It's just unreal numbers with this growth rate, only 20%. Normal valuation will be like 10 by price to sales, and for price to earning I think you can buy it lower than 20, maybe like 18 or something like this. Now we have 55. Interior they can draw down for 60%, and they will just cost not really interesting for me. Next one is Intel Corporation, and I actually thought that in some time we will see this huge price spike. Average price to sales 2.59, price to gross profit 5.98. Net income not actually working here because they had negative income in the previous years, and you can just burn it, maybe 50. What we can see here, first of all, they can grow the revenue and it is falling. Definitely now it is some sort of a manipulation for 185%. I don't think that they will come back to stable growth rate and stable huge margin like 25. I just don't believe in it, because if you will research it deeply, you will see that they're just offering some new stuff that not really work, and they are promoting it from 2020 or maybe a little bit earlier, and right now you can see that 2000 days, and we don't see any cool stuff. Yeah, negative margin, nothing interesting, just market don't believe in it. It's quite interesting what analysts say about this stock, because we can just come back to this video in 3 years, and if we wouldn't see profit in 2027, that it is interesting, because they predict 5% growth rate, and unbelievably 58% future EPS growth rate. I don't know how they can do it. In theory, analysts can predict something like 30% revenue growth rate, and this is how they can transform to profitable company. With these numbers, it just don't make any sense for me. Coca-Cola, KO ticker. I think they have normal valuation by this strategy. And you can see that red line quite good, reflecting the price, and we're just trading with a normal valuation. I think I will add this company to my watch list on like $60. But honestly, it is not really possible to buy it, because even on this spike, on COVID problems, like you had only 1 day to buy it with 30% discount to normal valuation. I think just people wouldn't let us to buy it for cheap, because it is Coca-Cola and they're paying dividends, 2.7%. Yeah, Coca-Cola is awesome, but it is not interesting to buy for a normal valuation. I definitely want some discount. Future revenue growth rate 3%. Even with $60 per share, it will be hard for me to buy, because it is not growing really fast. Next one, CSCO Systems, CSCO. Average price to sales 4.12, price to gross profit 6.49, and 20% price to earnings, and you can see that CSCO Systems cost really huge amount of money right now. And if you don't know, actually the previous high was $81 in 2000. Now they surpass this level after 26 years. I think it is definitely an awesome company, but I just don't understand why they are on these valuations right now. Costco systems. And analysts don't understand actually too, because 6% growth rate significantly overvalued. Net margin not really high, 18%. With 6% growth rate and net margin 18%, it is okay to buy it like for price earning 20. It is okay, but 28, it is like 40% higher. Yeah, median 19.78, and it is just super expensive right now. Applied materials with ticker AMAT. Semiconductor equipment and materials. I will just pass it because we have the same for all semiconductors stocks, like Lam Research. I think they are quite close, like Visa and MasterCard. I just don't want to waste your time, so I just think that we can dig to Morgan Stanley, ticker MS. Price to sales 2.12. Price to earning 13.3. And now we have a little bit higher than fair price for like 30% or something like this. I think Morgan Stanley will be interesting lower than 220, and we have just wait for 37% drawdown. Here you can see on Guru Focus significantly overvalued sign, and analysts predict 8% growth rate. It is not huge, and from I think they just has to devaluate, you can say it, and it is not really interesting for me. But again, we can see top tier revenue, highest number from the past. Maybe if you like banks and you understand them really good, but I think if you see price to book close to 3 in bank, you just have to pass it. Yeah, it is not interesting. 1.2 is okay. Maybe 1.5 is okay for Morgan Stanley, for a big name, but in 2020 you were able to buy it with 0.65, and I think it is better than 3 price to book. Next one, MRK drug manufacturers with ticker MRK. Average price to sales 4.22, average gross profit 5.86, net income average 62, and it is not normal. I think they this really huge number in 2023. we can just lower it to maybe 20, or 19 or something like this. Yeah, we can see that red line from time to time reflect with price, and actually it is a fair price right now. If we can see something like maybe 20% growth rate in the future, or maybe like 15, it will be absolutely okay to buy it here and just wait. But from the other side, in September, it was like 30% lower. I think it is quite hard to buy it right now. You have to understand what will bring them to higher valuations. MRK fairly valued, like I am. Future revenue growth rate 5%. Yeah. You can just come back when price training will be significantly lower. Maybe 90, it was a really nice level to buy and hold it. But again, you have to research with pharmaceuticals companies. It can be a little bit tricky. Next one, United Health Group, UNH ticker, and actually it was some government things, and now they are losing net income, and it is sad because when you draw down from net margin 6 to 3, you have to lose like 50% of your valuation, and actually you can see that they are lost it. Some people buy it here and they think that everything will be okay in the future. From my point of view, it is close to a gamble, but big names buying it, and what analysts expect in it. Analysts expect that their revenue will grow for 3% per year, not really nice, and you can see future EPS growth rate close to 13%, 14%. Maybe they will recover and you will make money, but I think I will pass it. Actually, I researched this company and I didn't buy it here, here, and here. Now we have the same price. Actually, they come back for 25%, and as you can see, not interesting. And we have two companies more. It is GEV, GE Vernova. I don't know what is it. And the last one, Goldman Sachs Group. I think I see this company first time in my life. Something new. And you can see that actually 40 for this company for price earnings is absolutely okay. But it is interesting with 12% margin, and actually GE Vernova engaged in the electric power industry. It operates through the following segments: power, wind, and electrification. The power segment offers design, manufacture, and service gas, nuclear, hydro, and steam technologies, providing a critical foundation of dispatchable, flexible, stable, and reliable power. They're growing on AI boom, and maybe it is interesting, but definitely you have to dig a little bit deeper. On the Guru Focus, you can see that actually future revenue growth rate will be 14%, and it is absolutely okay. With margin 12%, you can buy it for maybe price earning 30, maybe a little bit lower. And again, it is overvalued, like 100% overvalued. Don't buy it. No. And the last one, Goldman Sachs. Don't forget to push the like button if you're watching this video. Our stream 11. Price to sales 1.6, price to earning 11, and you can see that earnings definitely growing, but previously it was a higher earnings. Overvalued again, Goldman Sachs. I think we will see the same problem with price to book. And if you're buying capital markets company, price to book is absolutely normal how you can evaluate this company. And previously you were able to buy it for 1 price to book in 2023. Definitely not a good time to buy it right now. And it is sad because we have huge amount of companies that are overvalued, and probably it will be a huge problem in the next years. Thank you for watching. Bye bye.